joining us for this session hosted by FundsIndia Partner, where we are pleased to present the launch of Certus Hyderabad NCD opportunity. Today, we are joined by two stalwarts, Mr. Ashish Khandelia, founder Certus Capital, and Mr. Manish Gadhvi, CEO FundsIndia Partner. We are delighted to have them with us to share their perspectives on the Certus Hyderabad NCD and the opportunity it may offer for partners and investors. So, without any further delay, let's begin. To start the session, I invite Mr. Manish to set the context and lead the discussion. Mr. Manish, over to you.
Good afternoon, everybody. Thanks for joining in. It's well known among all our partners, and we've been working with Certus for almost 2 years now. So really thankful to Ashish Bhai, Ritesh for helping us build this business. And we all know the quality of papers that Certus brings to us, and the professionalism that Ashish Bhai has cultivated in the firm. Really, we really big fan of what he has built. So today we'll launch a new paper which is from a project out of Hyderabad, if I'm not wrong, and we're changing a couple of things. So to explain that more in detail, I'll have to invite Ashish Bhai on the stage and explain us. Most people are familiar with what a Certus NCD is, or the NCDs which we distribute with Certus are important to understand. So over to you, Ashish, and thank you for taking time out and addressing our part.
So thank you, Manish, and thank you everyone for joining us for this session. I think we have done a few sessions earlier, so I'm not going into the introduction of Certus or the various NCDs that we have done with all of you. We have a very interesting opportunity that is coming up by the end of this week or early next week. We have already finished the work at our end, but it will be live in next 3-4 days. So based on various feedback that we have received, we thought that we will give a bit of a preview of that, so people are aware of what that opportunity is, and they can do the work at their end by the time it becomes live, right? So with that, I will straight go into what we are doing. I will bring up a presentation and then straight go into what we are doing, technical thing. So what I was saying was that, a very interesting opportunity. We are overall committing 250 crores. We will be, in the initial tranches, we will be investing more than 100 crores into this transaction. What is very interesting about this transaction for us is that one, it is quite an advanced stage project. The group. So let me first talk about the group. It is a 30-year-old group. They have delivered more than 70 lakh square feet. They have another close to 30 million or 3 crore square feet that is ongoing across various things. Between them, they have to receive more than 5,000 crore of overall surplus. And a lot of that surplus is coming from projects which are already under construction, including about more than 1,000 crore coming from projects which are almost 80% sold or 80% complete. So, overall, the group has a fair amount of profitability embedded in a lot of projects that they are doing, right? Over the last 2-3 years also, they have sold more than 6,000 units. They have collected more than 4,500 crores. They have repaid debt of about 1,000 crores, right? And some of the largest financial institutions that include SBI, Canara, Kotak, Tata Capital, Piramal, various of these people, they are all lenders to this group. So, so they have a fairly strong banking relationships and a fairly strong operating performance. Now, honestly, what has happened in Hyderabad is over the last 2-3 years, there were certain changes to the rules relating to projects closer to ponds, etc., because of which for couple years, some of the projects took longer than what they should have taken. This happened for Hyderabad as a market. And because of that, that is why this kind of an opportunity got created, that some of the cash flows that should have happened about a year back, now they will happen in about a year to 2 years in future. So as a result, we are looking at a transaction right now where we have a project which is basically 5 towers of 31 stories. And all of these 5 towers are practically complete. You will see that the RCC is complete across 2 towers, and for the other 3 towers also, either they are on the terrace floor or the final last floor is being made. Also, interestingly, 65% of the project is sold, about 70% of collections are done. So again, a lot of history about the project in terms of their selling capability, in terms of their collection track record and all of that stuff, right? The other interesting thing also is the project is very centrally located. You know, two major office markets of Hyderabad. One is high tech city, another is financial district. Both of those markets which total have more than 100 million square feet of operational office stock with some of the largest tenants. They are all equidistant, almost 15 to 20 minutes from this particular location. So again, a location that is very, very well, well positioned in terms of being proximity to office markets and all that stuff. And the very fact that it has already sold as much as it has sold, plus the collection that are there, it gives us a lot of confidence in terms of whatever is going on. And to that extent, the other important thing that we are also doing in the transaction, which we always do in all transactions, but I would just like to again highlight that in a way that when we make our assessments and all of that stuff, this project has been selling at the pace of about 120 to 130,000 square feet in the past, right? But when we are basically making our assumptions, we have taken up significantly lower volumes, right? In terms of how much we are assuming it will sell, and that is the function. That is why many of you have seen that our estimates ensure that we are stress testing the project enough for any kind of a market environment, even if it is slow or there is any kind of a change in the market. So we have already factored that in, and therefore many a times in reality the markets end up performing much better and our money comes a little bit faster, right? That is the thing we have seen. So like overall, why we are quite interested in this project, I think if I were to talk about 3-4 major points, I will and before I go there, here are some of the pictures where you can see all of these towers are nearly complete, which I was mentioning earlier, right? The clubhouse is also under construction. So the thing that we really liked about this overall project, as is mostly the case with most of our transactions, we have almost a cover of 2 times on the cash flow. So there is a significant room for things moving around. As per our estimates, even after we are fully exited, almost close to 200 crores will be left for the developer. If we go by developer estimates, I think more than 300 crores will be left for them, right? So again, fairly robust security package overall. So what we really like about it, project is very, very well located in Hyderabad. It is close to 100 million plus square feet of operational office stock. We have taken some additional collateral also. Then the project in itself is at a very advanced and a healthy stage where all RERA approvals are in place, all RERA is in place, approvals are in place, construction is nearly complete, lot of sales in place, right? The group itself is a good group with a lot of history of executing 70 lakh plus over many, many years and a lot of other projects going on, right? Also, there's a fair amount of surplus that they will get, which I was mentioning earlier, almost 5,000 crore plus from their ongoing projects, right? And then most importantly, on the project itself, our security is fairly robust. As I was mentioning, just on our own assumptions, which are significantly slower than whatever assumption the developer has given to us. We have about 2 times the cover, close to 200 crores of future surplus left after we are fully exited, and we have mortgage over the land, we have mortgage over certain additional units in another project, and all the standard security package that we have, which is pledge over the shares of the SPV. We have corporate guarantee, we have personal guarantee, all of that stuff. So the overall transaction, and the other interesting part about this transaction is this is despite its very advanced stage of the completion, this is the return on this transaction is about 14.5%, and very importantly, the entire return will be serviced on a monthly basis, right? So that's the other key feature of the transaction. Out of the additional collateral, and here also I would like to state about 70 odd crores of additional collateral has also been taken into this another project of the group, where also you would see our security is pretty much in very advanced project towers of that particular project. So if you will see that we have taken almost 1,20,000 square feet of an additional security, of which almost about 90% units are in advanced stages of completion. These are all the advanced stage towers in our collateral project. And this is the other thing that I was mentioning. So if you will see that the group has these various projects that are running, some of these projects which are more than 80, almost 80% sold, and in terms of completion also they have spent at least 80% plus of their cost. They're going to get almost about 1,000 odd crores of surplus from there, even after paying all of their debt. And many of their other projects where they have also spent almost close to 40% of the cost and almost 45% of sale has happened, then there is another close to 4,000 crore of surplus that is expected. So even if I take some margin compression here and there is a fair amount of surplus that the group is likely. That's a high level overview of this transaction. We are likely to make this transaction live by end of this week or early next week. And there is one more, there are certain terms and all that which I think we can discuss on this call, or Ritesh, you may share later with the group. So the idea is that we create a small amount of a certain incentive for the investors also to participate in the slightly larger quantum and early on. So we will create a discount of about 0.25% for that. Before for people who really invest into this project by, let's say, 10th of May, or in about over the course of next 2 weeks or so, and invest at least 30 lakhs. So that is a special kind of a thing that we thought we will do for this project, given its size and given the fact that we have an opportunity to offer a little bit of that for early investors. Happy to discuss any questions or any clarifications that the group may have.
स्टैंडर्ड क्वेश्चन है जो बहुत बार हमने आंसर कर दिया है, बट मे बी मिस्टर मनोज इज न्यू टू सर्टस, is again asking a simple question that builders get finance from banks. Why would a builder take? And also please explain that the cost of borrowing is not that high in this business. So can you just answer that question? Okay, why does the builder go to the bank or an NBFC?
Right.
It's an old question keeps coming to us, but
Yes, no, but that's a fair question, so we can answer that again. So see, what happens is basically when you conceptualize a project, it goes through overall its life cycle and all that stuff, right? Now the various norms that banks and NBFC have to follow to do funding for real estate, they are very, very tight, and they had been mandated by Reserve Bank of India. Now what happens is, in a project where, if for example, if a project needs, let's say, a little bit more working capital, then most banks and NBFCs cannot come and add that working capital in the middle of a project, right? Now the project can need working capital more because either the costing is going on a little bit more, or many a times, and this is what we have seen in every cycle, many a times people are very, very aggressive when they launch their projects, and they think that they will sell 3 lakh square feet in 1 year, where in honestly they are able to sell 2 lakh square feet. And when that happens, it creates some kind of a working capital mismatches. Now, once a facility has been structured by a bank or an NBFC, then they cannot change it. But that is the very reason we do all this business in the form of NCDs and all that, because we don't have such restrictions. And therefore, for this now, effectively what is happening in this project is, it is at an advanced stage. We have about very visible cash flows. The RERA completion date is December 2024. Company is very confident of finishing it by September 24. But when the project reaches at a last stage, that is when it needs a lot of working capital. Also, many times what happens is, people who are yet to buy, they have to pay 80% today. But if we wait for another 15 minutes, they have to pay only 100%. They don't have to pay GST. So many people then wait out their decision to buy at this point in time, especially in a market environment which is now not increasing its price by 10-15% every year, which was happening for the last 3-4 years. Right? So you get very interesting last mile opportunities in this kind of a market environment. And because of these RBI regulations, they cannot go to a bank or an NBFC and ask for additional working capital. So that is the reason some of these transactions come to us. And as Manish was saying, that because the overall cost, and he is really carrying this cost for about 12 to 18 months max, it does not, what is more important to them is to get more working capital and finish it quickly rather than run it very, very slowly without doing this kind of a transaction.
मैं हिंदी में बोल देता हूँ. Basically banks and NBFCs are very strict. Their terms are not flexible because of RBI regulations, etc. They want flexibility. That's why they raise money through NCDs. Anyways, I don't think that the banks and NBFCs have enough capital to fund every project in the country. So that is another thing. Can you name the builders? There are people who are asking who is the builder.
So, sir, we can certainly name it. It is all done. Generally, we don't do it before it is closed. So, I would request once we launch the deal and give it to that, is it okay if we let it be at that time? Every name, website, everything will be disclosed in the file.
2-3 दिन के बाद मिल जाएगा.
हाँ, exactly.
ओके, सो जस्ट मैं ये की टर्म्स रिपीट कर देता हूँ कि there is an early bird incentive to people who will invest. What's the hard stop for that? Which date?
10th of May.
Before 10th of May, and with a minimum investment of 30 lakhs, right? If they do that, instead of 14.5, they will get 14.75% interest. Correct?
Sir, they will get 0.25% discount on the face value. So for buying a 1 lakh bond, they will have to pay only 99,750.
वो IRR में कितना हो जाएगा? मीन्स कुछ do we have any number
IRR
on
के
that?
अंदर मेरे ख्याल से 20 एक पॉइंट बढ़ जाएगा.
हाँ वही तो 14.5 के बदले 14.
थोड़ा सा ऊपर
राइट, थोड़ा सा ऊपर जाएगा. So that is the early bird offer. Invest before 10th May and invest minimum of 30 lakhs. Correct?
Correct.
And the 14.5, let's say you invest after 10th of May, all of this interest is going to be paid monthly instead of generally quarterly. Correct?
That's right. That's right.
And the minimum investment is 20 lakhs per NCD, per CLAT.
That's right.
Correct. Okay. Are there any questions? Naveen, I think so. Somebody is asking, do you think residential market in Hyderabad is in any kind of stress? Ashish?
I don't think residential market is in stress, but what is generally going on in Hyderabad and across the board, and this is a typical cycle that we always see, is that over the next 4-5 years, the increase in prices will be more moderate. So what happened was between 2020 and 2025, the increase in prices was quite strong. Now increase will be more moderate. So the sales cycle will be a little bit longer. And that is exactly what we keep underwriting. Like the builders believe whatever volume they believe, and that is why I was showing the fly. If they were doing 1,20,000 last year, I think they will still very confidently do 100,000. But we are still doing all our numbers assuming only 60,000 will get done. Right. So markets will move around beyond the point nobody knows. But in my view, markets will be in a more stabilized form as opposed to in a very aggressive mode. And we don't expect too much price appreciation happening. So that's how we are keeping all our numbers in underwriting.
And what's the tenure for this product?
The overall tenure is 4.25 years, but as we have seen with a lot of, we are underwriting it to 4.25 years, keeping in mind if there are any markets ups and downs. But in all likelihood, in about 2.5 years, the money is likely to come back.
Okay. NRIs can't invest, right?
No.
No.
I mean, we have a fund now, so they can certainly do that. And we are also taking accredited investors if they have accreditation status. So that is the option for them.
So there is another, just for everybody else on the call, Certus as an AIF in which NRIs can invest, right? And accredited investors can invest. But the NRIs cannot invest in the NCDs. The minimum investment needed for somebody to invest in an AIF is 1 crore rupees. For accredited investors, it's 25 lakhs. So somebody is asking, have you faced any defaults as a company?
Yeah.
Ashish?
So as a company, we haven't. Since 2009, since I was head of acquisitions in Morgan Stanley, in any of our investments, we have never lost capital. In practically all our investment, we have also never lost return, except for two investment during COVID stage, where we made 8-9% as opposed to 15% we were supposed to make.
So not a loss of capital, but loss of return. And that was
Yes,
due to COVID. That's it.
correct, correct. During that time.
Yeah. So Savio, we don't get this, the NCDs rated because they are not listed NCDs. So they are neither listed, neither rated. Okay, any more questions? If you have any questions, you can type in at the end of the. For the monthly interest payment is for all investors, Saurabh. So whether you come in early, if you come in early, you will make some more extra return, but the interest is going to be paid monthly to all investors. So I think so, Ashish, you should take what Tushar is asking, that uh, if there is something goes wrong with the project or something, can you explain the security part of this?
Yeah,
If you can pull it up or.
yeah. So, so I will just walk it through and then explain if need be explained. See, what we do is basically when we make an investment, we are not taking the charge only on a certain number of units and all that stuff. We take a charge on the entire entire project, including the land, including the buildings, receivables, bank accounts, etc., everything, right? And we are the only charge holders, or basically investors who have invested with us, including institutions, they are the only charge holders. And that is why I think the numbers that we were showing, and let me bring that up again. So what we really want to highlight is that at our own level, honestly, when we are making an investment, we are putting all of this money from our own balance sheet, right? And we also continue to hold a very large portion. So we are as aligned with our investors, as any fund house can be. So what I want to really highlight is when we think of what the company believes that they will be able to sell, and their pace at which they can sell, the prices they can achieve, the cost at which they will do, their expectation is almost 350 crore plus is what they will be left with after we are fully out. We have sensitized it quite significantly. People ask us about the questions around the market. People ask us questions about cost changes, etc. So you will see that we have taken sales significantly slower than what company says. We have taken collection significantly slower than what the company believes in. Our costs have been increased for contingency margins and all that. We have also taken lower prices, right? And despite doing all of this, after we get out, there is about another close to 185 crores or so left after we are fully out, right? And then even if you further sensitize it, we are still left with more than 125 crores. So going back to, so that's kind of how we look at it. And this is what I was showing when I was showing these examples here. This is the actual performance. They sold 2,10,000, they sold 1,20,000, they sold 1,30,000. But you will see we are only taking about 57 or 58,000 square feet. By this time, the project is nearly ready because the buildings are already ready. Money is going into finishing, for which we are providing a lot of working capital, right? And then also you have about, we are only selling 115,000 square feet, which is still less than what they have sold in the last year, right? And during this period of time, a certain amount of moderation that needed to happen in the Hyderabad market has already happened. And despite doing all of this thing, there is a lot of value that is left. So if tomorrow, even if things are selling slowly or whatever that is, one, there is a lot of value behind us. Then we have this entire security structure that is there. So really speaking, there are a lot of safeguards that are already built into the structure. Why do projects get into a problem? They get into a problem because either they don't have adequate working capital, or they don't have approvals and they can't get those approvals. If the market movements, you can underwrite, you can stress test them, and they will, and basically if you then do it properly in various scenarios, you will still get your money back. If tomorrow, for whatever reason, we are not getting our money back, value of security is significantly more than ours. We have NCLT, we have other enforcement mechanism, we have enforcement of pledge, we have personal guarantee, corporate guarantee. Then of course we will have to take the legal route. If we have to take the legal route, it takes time. But generally, when there is so much value out there, typically we don't have to go legal at all. We are able to work with the company, make sure projects get done, and we get our money back.
Yeah.
Yeah.
We'll see if there are any more questions. If some units are sold, can we take charge on all sold units also? That is
So
one more
typically,
thing.
what happens if some of the units are already sold, we still get charged on all the receivables that we have to come from them, and there is a proper document called deed of hypothecation to get those charge on all the receivables.
So the charge is on receivables, right? So whatever the
Correct.
client will pay, that will come to
Correct.
us rather than the
That has
builder.
to come. Exactly. Otherwise, that unit will not be handed over to the client.
Yeah, think so. We have answered uh, most of the questions, Ashish. Uh, there are people who might be new to this on this call.
Sure.
Again, I would urge them to talk to our teams, local teams. Right, we have been selling these NCDs, and we have been working with Certus for the past 2 years, and our teams are smart enough to answer most of your queries. Again, it's a it's because this is debt, because this is giving you double digit returns. There is a lot of skepticism around this because this is real estate linked, but it has a tangible security, tangible enforceable security, right? Backed by each of these investments, and I think so. It you'll have to spend some time understanding that, but trust me, we have done enough of business with Certus, and we are fairly confident that all the investments that Ashish and team make are of the best quality and the best due diligence they can do as an investor. Yeah. I think so. We can end this here, Ashish. And I mean, you want to take the last question? We can take. How does the escrow mechanism work? For if you want to answer that last
Sure.
question.
So yeah. So what happens is, so we have the whole escrow mechanism. HDFC Bank is typically our escrow bank. So before we make an investment, all these escrow accounts are set up. Then what happens is, whatever money we disburse to the project, or all the cash, or all the collections have to come into an escrow account. Also, typically every project, because people have that, the builder can take money in cash. But for any sale that has to be done, there is a minimum price that is already mentioned in the debenture document. So the developer can only sell the unit at a price higher than that, or even if he sells below that, whatever is the difference. Let's say the price was 9,000, he sold it at 8,000. So he has to put in 1,000 rupees into the escrow account. No money can be released from that escrow account without it is independently verified by either a technical monitor or a financial monitor. And once they clear those bills, then the money can only be used for the purposes of funding the project cost, which are bills verified by these independent monitors, and they are very capable. They have been doing this for many fund houses, some of the largest kind of deals. We have ourselves been part of 1,000+ crore deals where the same monitors have been used, right? Then only those monies are paid for the cost of the project. Therefore, you will look at it even in this very short period of about 4 odd years that we have brought these NCDs to the domestic market. Otherwise, before that, all this work was being done only with foreign institutional investors. We've already exited 8 transactions, and all those transactions, the construction has moved very well. And a lot of the escrow mechanism has a lot of role to play in that. That also ensures that our interest gets serviced on time.
Correct. What is the personal investments that the team does in each of these NCDs?
So,
Is there an
yes. So we typically, as a team, personally, I hold at least 5 crores or 5%, whatever is lower in each of these NCDs, right? Or there will be a Certus managed fund that is holding a large position in these NCDs and all that. Rest of our team members are also typically invested in these NCDs. So as Certus, we have typically seen we end up holding anywhere between 7 to 8% of a NCD exposure. But in all our historical NCDs, including this NCD, I am personally holding at least 5 crores or 5% of the outstanding debenture, or whatever is lower. So fairly large amount of commit.
even though they are unrated, unlisted, is it right to tell the investor that our bonds are registered with SEBI and they carry a high sin, etc.? No. What
So
do you?
the bonds certainly carry an ISIN and all that. So they are all dematted bonds. When they will make an investment, bond will get transferred to the demat account of the investor, and the interest and the principal will automatically go to the bank account linked to the demat account of the investor. But they are not registered with SEBI. Unlisted bonds are like any other unlisted security, are not required to be registered with SEBI.
Correct. I think so. We can end here. Thank you to all the partners for being on the call. Thank you, Ashish, for taking time out. And best of luck to everybody. You need help. Ritesh from the Certus team and our teams are always there to answer any questions that investors might have. Thank you, everybody. Thank you.
Thank you. Thank you. Thank you, Manish. Thank you, everyone.